Hi there, you're watching Market Cafe with me, Shreyansi Singh, and over the next 1 hour, me and Priyanka Uppal will be getting you updates from within the country as well as across the globe. Also tell you which stocks you should be keeping on your radar as well. But well, speaking of stocks, first things first, let's take a look at the handover then coming in from the Wall Street. It was quite a mixed day in trade coming in as far as Wall Street is concerned. When you take a look at the Dow, that is the one that fell more than 200 points. S&P 500 as well, shed 0.3% thereabout after the closely followed consumer price index reading showed inflation came in hotter than what was being anticipated when it comes to the month of January. So that was largely the kind of handover that you're looking at. And you do also have the tech-heavy Nasdaq Composite that also ended marginally above its flat line, but not much to look at when it comes to that particular index above also as well. When you take a look at what else happened, you do have advances of more than 4% and 2% when you take a look at Palantir and Tesla respectively. So that is something that you saw coming in as far as the Nasdaq Composite is concerned, powering the move coming in for that. And that was a very blue line sort of move coming in, not much to write home about as far as even that particular index is concerned. But investors, of course, will be going forward, watching out for the latest data from the producer price index, which also measures wholesale inflation. So that's the one to watch out for, and also monitoring weekly jobless claims data due out in the morning. Other than that, you do have the earnings season that is continuing, along with the likes of Airbnb, Coinbase reporting their numbers after the closing bell. So keep an eye on those counters as well. But with that in mind, let's also take a very quick look at oil prices then, because you do have oil prices that fell more than 2%, ending 3 days of gain. So that's the kind of handover that you have as far as crude is also concerned. You do have industry sources pointing to rising US crude stockpiles. That is something that has had the markets quite worried. You've had 9 consecutive drawdowns as far as US crude stockpiles are concerned, and something that you're seeing coming in as far as US crude stockpiles is concerned is quite worrying as far as crude prices are concerned. When you take a look at Brent crude futures, $1.8 downtake or 2.3%, 2.4% thereabout downtake coming in for Brent futures. $75 a barrel is the kind of level that they maintained even despite that downtake. But when you take a look at US WTI as well, that settled 2.6% lower, almost 2.7% lower, around that $72 a barrel mark. So that largely is the kind of handover that you have, but the decline of course comes after 3 days of gains. That's the important trend to note, because you do have Brent that climbed 3.6% during just those 3 days, and WTI that rose 3.7%. So largely that's the kind of handover that you're looking at as far as crude as well as Wall Street are concerned. But with that in mind, let's take a look at US inflation, because that is the one data set to watch out for. We've been telling you about it all through this week, and that is the one data that has come that ran hotter than expected in January, like I mentioned earlier, with the consumer price index rising 3% on a year-on-year basis and 0.5% thereabout on a month-on-month basis, beating forecasts. Core CPI, which excludes food and energy, climbed 3.3% annually and 0.4% monthly, also coming in above estimates. Now, the data, of course, suggests that inflation remains sticky, making a near-term Fed rate cut less likely. So that's the kind of read-through that you're seeing as far as CPI is concerned. Markets, of course, are now debating whether the Fed could even consider a hike instead. So that largely is the kind of handover that you have. And speaking of the Fed then, on the second day of his testimony, you do have Fed Chair Jerome Powell, who reaffirmed that he won't resign if asked by Trump, and stressed that the Fed makes decisions based on the economy, not politics. In fact, he also signaled that policy will stay restrictive for now, as inflation is close but not there yet, especially after the CPI print. In fact, Powell also noted that the Fed still has room to shrink its balance sheet and may need to adjust rates if tariffs impact inflation. So that's important commentary coming in from the Fed chair.
All right. In the meantime, US President Donald Trump wrote on social media that interest rates should be reduced. He further said that lowering rates would work in tandem with the upcoming tariff policy, half of which have already been levied and the rest are underway. This comes a day after Fed Chair Jerome Powell said policymakers do not need to be in a hurry to lower rates as they watch progress in inflation.
All right, then moving on. Meanwhile, the US posted a $129 billion budget deficit as far as the month of January is concerned, sharply higher than last year's $22 billion gap. The spike was driven largely by calendar shifts which pulled $87 billion in February benefits into January, alongside rising costs for Social Security, Medicare, and debt interest. Now, excluding timing effects, the deficit increase was a more modest $21 billion. Treasury officials made no mention of Elon Musk's reported cost-cutting efforts as well.
So it was been some lose-some situation on the macro front. Retail inflation in January hit a 5-month low, coming in at 4.31% versus 5.22% in the month of December. Now, the CPI data for the month gone by is even lower than the 4.5% mark. 4% rise, which the economists were expecting. The downtick in retail inflation is primarily led by softening of food prices. The easing of retail inflation comes in at an opportune time as RBI recently lowered interest rates and will be eyeing inflation trends to decide the future course of action for interest rates. Meanwhile, underscoring slowdown in the economy, industrial output for December, that one came in at 3.2% versus growth of 5.2% in the month of November. Now, we decoded the numbers with experts and even asked them about their expectations from FY26. Listen in.
Given a host of indicators, including the IIP number that has come in weaker today, the GDP growth in Q3 would be closer to 6.2%, and this kind of presents a downside risk to FY25 forecast, or the first advance estimate that pegs it at 6.4. I think for next year, I think at this stage, 6.5 to 6.6 seems achievable. For India, I think we are going to get support both from, the government spending, both in terms of capital expenditure and revenue expenditure, and the election uncertainty or the, drag from the election effect kind of fading away in FY26. I think positively also, Rabi sowing has been doing well. We had a good summer crop as well. So this bodes well for, how rural demand is going to pick up, over the coming months. So at this stage, I think a 6.5, as I said, seems achievable. I think the only joker in the pack would be, the kind of drag or the kind of risk that we would face from the external side. And, we still don't know how tariffs are going to pan out, in the US.
It's much lower than expectations. But I think the reason is because when it comes to food prices, it's a bit difficult to predict on an accurate basis. So I think from what I can see, the number has come down to 5.7% for food and beverages. Now, this is a number which we thought would be probably in the region of around 6%. So I think it's going much according to expectations. So by the time we come towards March, I think things should be looking even better. So we should be in this region of 4.5%, quite justifying the act of the Reserve Bank of India of lowering the repo rate.
While urban is still relatively softer, rural is showing clear signs of pickup in Q3. And also the good news is that the government capital expenditure has picked up, at least at the center level. We saw some limited pickup in state government capital expenditure in Q3, but it was far softer than what the center has undertaken in Q3. But overall, we are broadly in line with the advance estimate. Advance estimate is at 6.4. We are tracking somewhere at 6.3. More important is what to expect for next year. For FY26, we're around 6.5. So more in line with what the economic survey has projected in terms of their range for FY26.
All right, then the joker in the pack is largely the risks coming in on the external front and tariff fears, but there's been a recovery as far as rural is concerned. That's the word coming in from the experts then. But moving on, Prime Minister Narendra Modi has arrived in the United States. His first visit to America under Trump's second tenure, and this is an official working visit of PM Modi to United States that comes at the invitation of President Donald Trump. PM Modi, of course, is among the first few world leaders during Trump 2.0 to visit the United States for a meeting with the President. Trump as well, and US extending an invitation to him just weeks into Trump's second tenure demonstrates the kind of importance that the US attaches to India. But what's on the agenda then, and what's at stake for this particular visit? Times Network's Madhav Das Gopal Krishnan joins in with all of those details.
As Prime Minister Modi arrives in Washington, D.C. for his first bilateral visit in Trump 2.0, the two leaders of the world's oldest and the world's largest democracy will be sitting down, and it will be, of course, business as usual. Now, what's very important is that not only do they have a close personal relationship and an equation that we've seen publicly in Trump's first regime, but now there are several challenging issues for the two countries. While the points of convergence and mutual cooperation continue to be very important. China, for instance, continues to remain a common factor and a threat for both these countries on multiple fronts. There's also, of course, a strategic partnership and, of course, the entire defense procurement that India has been doing from US. His own concerns, of course, of India have been expressed on multiple occasions as well. But the big issues that will have to be tackled are immigration and, of course, the entire issue of tariffs. While President Trump has in the past articulated his views on tariffs, he has also on occasion gone back on them. The case in point being Canada as well as Mexico. In the case of India, while the union budget has made some amount of concessions to the United States, will that be enough to satisfy the position that has been taken by President Trump? Will there be more, for instance, demands for investment from India's side? Because President Trump clearly sees FDI as a two-way street and not a one-way street as has been currently happening. Also, of course, purchase of American products is something that has been expressed time and again in the past. How much of that will actually be accepted by India remains to be seen as well. Talking about immigration, challenges over there as well, about the manner in which the immigration was taking place, which India has, of course, raised privately with the United States, and also, of course, continues to raise as far as this particular meeting is concerned. So all in all, a very important visit. Will there be any big-ticket announcements? The expectation, according to experts, has been very, very muted. Officially, of course, nothing that has been shared, but there will be an official briefing once the bilateral meeting is concluded, and that's something that we'll have to watch out for in terms of what the concrete takeaways are from this one particular meeting as well.
Right, a lot to watch out for. But then in the meantime, let's also listen into what KV Subramanian, who's Executive Director for IMF, expects from this visit.
India-US is really the partnership, of the next couple of decades. Given the economic opportunity that India offers, for instance, investors, American investors, actually, for them to be able to earn more than 10%, returns in a year in dollar terms, not just in rupee, actually something that there are few other large countries that can provide such an opportunity. So, from that perspective, I think, and President Trump is clearly, very, very focused on ensuring that, that the economy, the American economy does well. So in that perspective, I think there are clearly paths that converge. So I actually think that this visit would be one where there could be some important steps that could be announced.
Right. One of the things and areas of concern has been, the entire talk around tariffs. Now, one thing is about political rhetoric, but he's actually walked the talk when it comes to China, Canada, and Mexico. But again, Canada, Mexico is on hold for a month, is what we are told. How serious an issue do you think this is that is going to impact upon India?
So I think, from the Indian perspective, and, you would note that the Indian budget, the recent budget that was passed as well, took some important steps in this regard. I think the other aspect that actually, that needs to be focused on, when I think about overall trade between two countries, I don't focus just on one aspect of which is basically goods trade, and within that, tariffs actually. Ideally, the conversation needs to be, and especially from an Indian perspective, needs to be in the form of a 2x2 matrix where you have both goods and services and tariffs and non-tariff barriers as well. And there is some very good research that's been done by the WTO that shows that India, for instance, uses far less non-tariff barriers. And, that research shows as well that non-tariff barriers are more subjective and are oftentimes, far more opaque as well. So this is an aspect that I think India should be highlighting as well, because, some of these non-tariff barriers also affect the comparative advantage that India has, which is on the service sector side. So in my opinion, I think, this conversation actually would be far more beneficial if it is looked at it in a more holistic perspective, not just focused on goods trade trade, and that too on tariffs, rather than that actually across this 2x2 matrix, all the four, so goods and services and tariff and non-tariffs as well. I think that is where there can be actually a lot of common ground, in my opinion.
Right. Because one of the interesting things is that when you were speaking also against BRICS and imposing tariffs on BRICS, he was basically responding to a proposal about trying to de-dollarize, all this economic transactions. Is that something that is even practically possible in your view?
See, when one views, at this point in time, clearly dollar is the dominant currency, and at this point in time, on the horizon, one doesn't see any other currency that can actually take the place of the dollar. So I think the dominance of the dollar in international trade and also from international reserves is something that actually will continue.
Alright, then that's the word coming in from KV Subramaniam, who says that dollar dominance is something that he sees continuing, and de-dollarization is not something that is on the horizon at this point. But moving on, then let's take a look at the backdrop of this trip, because remember, this trip comes after a largely successful summit in France and bilateral talks with President Macron. We spoke to Amitabh Kant, who's a G20 Sherpa and former CEO of Niti Aayog, on PM Modi's visit to France. And how is India's pitch at France AI Summit different from the models and policies already in place? Let's go across and listen in to what Amitabh Kant had to say.
So one of the key things Prime Minister spoke about was the need to create foundational models based on data sets from the global south, which is very important. And he gave the specific example of the left hand and the right hand, and said that if the data sets are all coming in from the western part of the world, they will be trained exactly on those data, and they will not be able to capture the strengths, the civilization, the heritage, the culture of India and of the global south countries. So it's very important that we are able to firstly use the data sets. That's important. Secondly, use AI for public good. That is for improving learning outcomes, health outcomes, nutrition standards, etc. And thirdly, he said, whatever we do, we should do it in an inclusive manner, particularly for the global south. And these, to my mind, are very, very critical issues which the Prime Minister of India has raised at the AI summit. So even the executive order that was drafted during Biden's term has been scrapped by President Trump. So to my mind, you can't have a scenario where there's no regulation in the United States and we do our regulations. Regulations can't be done by emerging markets like India. Regulation has to be brought in, by an international body, and there has to be consensus between all stakeholders and all countries together, because AI has the potential to unleash a lot of productivity, transform lives of citizens. It is also capable of triggering conflict among societies. But that can't be done by India alone. It will require a lot of political will, and whatever innovation there whatever regulation there has to be pro-innovation regulation in a manner so that we don't stifle innovation in any manner.
Okay, so a responsible and a comprehensive ecosystem is what is being demanded by many nations, even India, on the AI front. We stay for a short break here. When we come back, we get you the cues from the Asian market and all the buzzing stocks that set you up for the day. Welcome back. You're tuned into Market Cafe on ET now. Now let's get you the cues from the Asian market, which fairly looks strong right now. The Asia Pacific market traded higher, especially breaking ranks with the Wall Street that fell overnight. If you look at the ASX 200, that one is up by 0.3%. Even a Japanese market, the main indices Nikkei and even the broader index topics both have jumped. Nikkei rose by 1.1% at the moment, trading at that mark. Topics also climbed nearly 1%, 0.9% the exact figure. And even the South Korean market looks like coming up with a upbeat with a 0.7% of gain on the opening note, whereas their small cap is trading around the front. Okay, now this one has slipped into red mark. Earlier when it opened with a gain of nearly 0.7%, but that one has flipped. But majorly, if you look at the Japanese market, ASX market, let's have a look at the Hang Seng also. Hong Kong, the futures were though indicating a positive start, and let's see how Hang Seng is trading. It's trading with a 1%, more than 1% of gain. So strong set of cues coming in from Asian market. GIFT Nifty, can't believe it at the moment, but it's indicating maybe a positive start. But let's see how this one fares out. Is it a day of the recovery trade? We are on an expiry day also. Shreyansi.
Well, absolutely. Let's see how that really pans out for us. Welcome back. Thank you so much for staying tuned in. Well, time now to get you some important commentary. And speaking of that, then Hardeep Singh Puri, who's the Minister of Petroleum and Natural Gas of India, spoke to my colleague Prakash about on the sidelines of the India Energy Week over the growing prominence of the event and its growth trajectory. Listen in to what he also had to say about PM Modi's upcoming visit to the United States and about the natural gas and ATF also possibly coming under the GST ambit. Then let's go across and listen in to what he had to say.
Energy security for India is both a article of faith, it's also our dharma. We have a large population, we have to make sure, and the Prime Minister is committed to making energy available to all sections of the population, availability, affordability, and we are the one country in the G20 which has met its Paris commitment. So green transition, sustainability also. The dates for this event are announced 1 year in advance. So the dates of 11th and 12th February were announced when the last discussion took place in Goa, etc. The first one was Bengaluru, second Goa. Now we are saying the next one will also be in Goa in February 2026. Meanwhile, changes that take place in the global geopolitics, we factor those changes in. It so happened that the United States has a president who actually is now talking about bringing more energy onto the market. As you are familiar, we are already buying $20 billion of energy from the United States. The Honorable Prime Minister is traveling right now on his way to the United States. What will be the discussion? I'm certain energy will figure in the discussion. How it will figure, we'll find out. So we'll see what happens, but the prospects look very promising. Indian companies which have an exposure to the West, they would not want to engage in transactions with those entities. That goes to see, but something that we will navigate as we go forward. I would be very careful about what was agreed and not to agree. These are all part of an ongoing process. If you were one of the states in the Indian Federation and you got a lot of revenue from petroleum and gas, obviously you would not want to give up. So we are in discussion with individual states. The intention is to bring gas finally under the GST, and I think it will happen sooner than later.
Okay, so this was an exclusive interaction with Hardeep Singh Puri, and yet to another exclusive interaction now with GAIL chairman Sandeep Gupta. He talks about plans to increase LNG capacity in India and also discusses sourcing of LNG from US. Listen.
We have a very old association with US as far as LNG is concerned, and of our portfolio, 5.8 million ton LNG is coming from US only, from two sources. So as such, we have a very strong relationship and very strong volumes coming from US. We also floated an expression of interest for taking an equity into a liquefaction terminal in US and the associated long-term supplies under that contract, which we had to call off because of the pause by the earlier administration in US. Now that the pause is lifted, we will, at an opportune time, we will revive that, and that will ensure further volumes from US.
And of course, considering all these factors, what would be your outlook for the current financial year, for the next financial year, I would say?
What respect?
Gas price.
Gas price. Now, as we are aware, because of the supply which is constrained from certain part of the geographies because of the sanctions, the prices are high. And while the pause has been lifted, no new project is likely to be commissioned so soon. So I believe that the prices may remain stiff for some time. But with more projects coming in US and also in Qatar and various other geographies, it is a definite possibility that the prices should soften going forward. And you never know, this Ukraine-Russia war, if supposing there is a negotiation on this aspect, I believe more Russian gas may also be available to the world, which will also have an easing support in the prices, and the prices should get soft.
All right, and that's the word coming in from the chairman at GAIL. But moving on then, in a major relief for Kotak Bank, the RBI has lifted restrictions allowing the bank to enroll clients online and also issue fresh credit cards. In fact, the bank has initiated remedial issues to address the supervisory concerns, and compliances have also been submitted to the central bank. Now, remember, the curbs were put in place in April of last year. Let's also go across to Ankur, who's standing by with more details. Ankur, tell us a little more about why these curbs were lifted, what the bank has also done to assure the RBI going forward.
Yes, Reserve Bank of India has now lifted restrictions on Kotak Mahindra Bank. These restrictions were imposed in the month of April last year because there were deficiencies in the IT system of the bank, and this was there for the assessment year 2022 and before. And later on, the bank did find some remedial measures. There was a report which was submitted by the bank. In fact, there was an audit also which was conducted by the bank on the same end. After that, now Central Bank is saying that the bank can have new customers onboarding online as well as can issue new credit cards. Now, with all these business restrictions, there was some business impact which was there on the bank, but now since restrictions are lifted, the bank can now onboard new customers online as well as can issue new credit cards. Remember, the bank had taken all these lapses into account, and the remedial measures were applied by the bank, and finally now Central Bank has lifted restrictions.
Limited a big psychology impact and also the financial impact. Let's understand the implication of this particular news. What kind of impact did the RBI curbs had on our Kotak Bank earlier, and what kind of growth trajectory now does the management expect now after the ban is lifted? My colleague Gaurav is here to decode all of those details for us. Gaurav.
Well, yes, a very positive news flow coming up for Kotak Mahindra Bank because now RBI has lifted its ban, and let's understand how it has impacted its financials. First, let's talk about PBT. When the ban was actually impacted, the brokerages believe that the PBT is going to be impacted somewhere in the range of 2 to 3%. In fact, management had also quantified this somewhere in the range of 300 to 450 crore rupees for FY25 itself. Before the ban, we have already seen that Kotak Mahindra Bank's credit card segment grew at a range of around 20%. In fact, when it comes to unsecured segment, we saw this segment also increased to around 12%, which was earlier was at 7% in 2020. But other than that, when the ban was actually imposed by RBI, we saw the unsecured mix went down to around 10.5% in the last quarter. At the same time, credit card growth was only at 2%. Net interest margins were also impacted because of the unsecured mix was changed, and that is the reason why we saw a sharp fall in net interest margin, and as a result, ROAs were also impacted. Let's also not forget that for bank, cost to income was also high because they were implementing new changes, and as a result we saw some impact on profitability. But after that, we also saw management was actually very optimistic. They said that growth trajectory is going to be very high in terms of cards and personal loans when the RBI's ban will be lifted, and at the same time they also said that credit card will contribute at a higher scale. At the same time, when we look at the valuations also, now Kotak Mahindra Bank trades at around 2.3 times price to book, which was earlier trading at around 2.6 times, and it is also lower than its 3 year and 5 year average. So definitely it makes a very strong case. In fact, when we look at brokerages, they had also believed that RBI ban lift is going to be a key trigger for re-rating. So definitely a very positive move coming up from RBI and for Kotak Mahindra Bank. And on back of this, we will definitely watch how the stock reacts in the day tomorrow.
Alright, and with that, it's time for a very quick breather in the show. When we come back, we'll get you the list of stocks that you should be keeping on your radar bright and early this morning, so don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, time now to get you the futures and options roundup. In fact, Ancha standing by with just that.
We are starting with Nifty first. Nifty has been declining for 6th consecutive session, and this is the longest selling streak seen in over 2 months. But the good thing is that we were able to sustain about the 23,000 level again on a closing basis, so we can have some positive hopes in the market. But if you talk about index options, then today we have weekly option expiry for Nifty, so we may see some good volatility in the market. On upside, we are seeing very strong call writing happening at directly 23,500 mark, indicating strong resistance around this level. Now, this level is around 500 points away from current levels. So that's the reason why we may see some good volatility in the market. Now, if you talk about Nifty Bank, then Nifty Bank has actually snapped its 3-session losing streak to close slightly in green, and it has closed around that psychological mark of 49,500. So unless and until we don't give a decisive breach about this level, below this level, till then we can have some hopes in the market. But in index future also, we are seeing that open interest has gone down by around 2.5%, indicating short covering, which is also a positive sign. If you talk about FI position, then in the previous session in index future, they have added around 3,700 contract on long side, but at the same time they have added short as well by around 6,000 contract, due to which the total long position has gone up to 15.1%, indicating that they are getting a bit of a neutral stance in the market.
Okay, at least a neutral stance is better than being the short on the market. Thanks very much, Ansh. But do tell us more about the Vodafone Idea, which has been in news, especially after the numbers. And now it seems there's no end to Vodafone Idea's moves. Reports suggest that the DoD, Department of Telecom, has demanded over 6,000 crore rupees bank guarantee within a month to cover spectrum dues since 2015. Tell us more about this.
That's right. So in December circular, Vodafone Idea had stated that no bank guarantee was required for spectrum auctions until 2021, except for one-time bank guarantee for 2015 shortfall, which was provided for a year. Now, this news was already out in December, but in a recent con call, the company again acknowledged that yes, they are required to provide a bank guarantee, but most importantly, this is very important that they have said that currently they are in a discussion with Department of Telecom, so there's no confirmation yet. Also, however, after the con call, market chatter has surfaced that suggesting that the Department of Telecom has asked the company to either submit a bank guarantee or make the payment. But for now, it's best to wait for an official clarification from either Vodafone Idea or from Department of Telecommunication.
All right, thanks, Ansh, for that lowdown coming in as far as Vodafone Idea is concerned. But let's also take a look at the other counters that will remain in focus bright and early this morning, because Ria is joining in with just that list. Ria?
Yes, good morning. Let's take a look at the stocks that are going to be in focus today. First up, we have Muthoot Finance on the back of its Q3 numbers. Quite a good set coming in here. Net profit has gone up around 32% over the previous year, and the net interest income has also jumped up around 42.8%. PPOP has also increased by 49.2%. If you look at the GNPAs and NNPAs, those have improved by 8 basis points and 17 basis points respectively, both on a sequential basis. So good set coming in for Muthoot Finance. ITD Cementation has reported an inline set of numbers. Revenue is up around 11.3% over the previous year, and net profit has also increased around 10 to 11% over the previous year. EBITDA has been largely flat in this quarter, and margins have seen a decline of around 97 basis points, coming in at 9.2% in this quarter. Moving on to Suven Pharma, good set coming in here. Revenue has jumped up almost 40% over the previous year. Net profit has seen a very strong growth of 78.2% over the previous year. EBITDA is also up around 78%, and margins have seen a very, very strong expansion of 826 basis points, coming in at 38.3% in this quarter. Godrej Industries also reporting a strong set of numbers. Revenue is up almost 35% over the previous year. Net profit has seen a very strong expansion of 89.8% over the previous year. Even the EBITDA, very strong growth here, up on around 113% over the previous year, and margins have also seen a very strong expansion of 459 basis points. Crompton Greaves, although has reported an inline set of numbers, revenue is up just about 4.5%, but EBITDA is up around 25% on a year-on-year basis. Looking at Bharat Forge, weak set coming in for Bharat Forge this quarter. Revenue is down around 10%, EBITDA also seeing a decline of around 10%, and net profit has declined by 16.4% over the previous year. Margins have been largely stable, coming in at 18% in this quarter. Further on Bharat Forge and Liebherr Aerospace and Transportation SAS have announced a landmark collaboration to establish a manufacturing facility in India. So keep your eye out on Bharat Forge on the back of this news flow as well. Shifting away from earnings, Zydus Life will be in focus, since Zydus and Synthen have signed an exclusive development, licensing, supply and commercialization agreement for a novel oncology product for the US market. And lastly, also keep your eye out on RailTel, since they have received 4 orders cumulatively worth rupees 135.9 crores. So keep your eye out on all of these stocks today.
All right, thanks very much for all that detail and the highlights about the stock that could be buzzing in trade on the back of earnings and the news flow. Thanks very much. With this, it's a wrap on this edition of Market Cafe. Thank you so much for watching, but we leave you with a key takeaway coming in from veteran investor S. Nareen, who talks about the beaten down spaces of the market that are likely to perform in this market. What's on his radar? Take a look.
The reality is, the asset classes which have done the best is obviously small cap equities. And the asset class which has done the worst would be liquid funds. So obviously in my framework and ICICI's framework, choose the things which have done badly. That which would be mega cap in equity at this point of time, banks within sectors at this point of time. We have moved out of this deep value syndrome and looking at relative value. We find relative value in banks and feel very happy because relative value is there in banks. We know that after 4 years of very bad relative performance, there is some amount of at least capital protection in some of the staple names. And, we believe that in telecom, we can't lose big money. So, there's a lot of relative value. I don't think we are in a phase at this point of time where you have this concept of value which we had 4 years back. That's not the situation at this point of time.